Amazing.
Perfect. Can everybody see that?
Yeah, good.
Great stuff.
Awesome. Well, we'll kick off. Alex and I kind of just done introductions, but if you just flick on a slide, Alex. Capsule has been the insurance partner to Foundrs for over a year, and I joined as we were really launching Capsule. Capsule is ultimately an insurance provider and fast becoming an insurance platform for high growth, largely venture backed startups and scale ups. Real focus in technology, whether it be fintech, D2C, e-com, frontier tech, kind of anything AI, AR, VR space, consumer tech, enterprise SaaS. So Foundrs feels a really good home there because there's lots of founders that are playing in that space. And really, I guess, kind of what we've spotted the opportunity to do came from our high growth experience of scaling our insurance business called Kingsbridge, which we took through 2 rounds of PE into an ultimate US trade sale. And what we really spotted is in high growth startups is that they tend to do one of 2 things. One is buy online, kind of self-serve insurer platform or broker, and then at some point outgrow that. And then the other is to work with kind of a traditional a commercial insurance broker, but where that broker isn't necessarily exclusively serving high growth businesses where things are changing constantly and they're possibly disrupting their chosen sector. And so you then ultimately kind of are an outlier in a pack of traditionally growing businesses. And so we have a real focus on protecting founders, protecting their management teams, the wider shareholders and VCs, but also customers and employees. And so today we're going to just fly through a little bit of kind of insurance education, some hacks and tricks and things to consider, a little bit of kind of market insight and update, and then take any and all questions, insurance related or not. So feel free, as AJ said, to throw something in the chat or shout, or equally just wait to the end and we can dive into some detail then. So yeah, just to give you a sense of the type of clients that we're supporting, anything kind of pre-seed and seed. Our real sweet spot, I would say, is Series A and beyond, all the way through to SPAC or IPO. When things get more complex, when a head of ops arrives, a VP finance arrives, and the founders kind of chucking insurance documents at you kind of 24 hours before you're closing a Series A, or when there hasn't been an equivalent of you in the role before. That's where we can add real value, is when a business is internationalizing, new markets, new products, team kind of big headcount growth, taking investment, and therefore things are going to change very quickly. We've helped the likes of your Onfido's kind of 7-figure insurance spend in re-engineering the program, making sure that you have an insurance program that where you don't feel like there's any gaps. You're getting strategic support from your broker partner. You've got confidence that you've got the cover, whether that's limits, whether it's kind of global basis versus local, and you're getting the support that you need. But as I said, kind of real range of sectors. So I think from our perspective, one thing we were keen to touch on is that link between risk management and insurance, especially Leonard, I think you mentioned Bloom and Wild, you've already gone through that kind of startup to scale up and kind of beyond journey. But as you really start to kind of get ahead of steam in that respect, then there is absolutely that link between insurance spend and kind of the perception of insurers, and then actually how a business itself looks at risk. And so we very simply split risk management into three buckets. So assets, whether that's your offices, your equipment, your digital assets, increasingly these days, and your brand, liabilities being your products, services provided, even data liability, and then people, your staff, those on your contractors. Somebody mentioned about self-employment, those that are kind of true contractors or through an EOR model. All of those different things present different risks, and getting an understanding of and assessing your business's core risks, whether that's in the shape of a risk register, can be very, very helpful for you as a business. It can also help when you're engaging with a broker like a Capsule to really map out what's keeping you awake at night, where are the perceived biggest risks within the business, and that allows your insurance broking partner to really then develop a program around that, but also to come up with risk management strategies about how to reduce that risk. And so I thought this is quite a neat way of just kind of talking around the insurance products that you will likely consider or should be considering, but they tend to kind of come in at different milestones. So if you're a true startup now, I think someone said they're in the kind of setting up phase at the moment. The first policy you ever will need to buy is employer's liability. That's the only one that's legally required beyond motor insurance, and that's covering workplace health and safety claims from employees. So the moment you have an employee, that's a legal requirement. Public liability tends to be the second one that you consider. You can buy them together in what's called an office policy. The public liability is covering your staff, allegations against your staff for damaging property or injuring people. And so where you tend to first hear about that and get asked for it is co-working spaces, landlords, and then if you're exhibiting at a show, all of those three will require you to have public liability. Neither of those very hard to come to purchase, neither very expensive, but both in the early days essential, and they tend to just grow with you as you scale. You'll then likely come across professional indemnity and cyber liability that are very closely linked. Either if you have an enterprise large client, often an American client, and you're signing terms with them, if you're accepting liability for errors and omissions, that's really where professional indemnity comes in. So professional indemnity in the US is called errors and omissions insurance. If you're a tech business, following that analogy, PI would cover financial loss by a third party because of a bug in your system, for instance. So if your software, your platform, your tech leads to somebody suffering a financial loss, or you give bad or wrongful advice, that's where PI comes in. Cyber liability, we've gone from kind of 5 years ago, nobody buying that, to this almost being the most important and expensive product on the roster. Cyber liability covers the first party and third party, and it covers, again, kind of financial loss, remedial action, the cost of putting something right in the event that you have a ransomware attack, malware attack, loss of data, anything like that. And again, increasingly required by enterprise clients. And then when we tend to really engage with businesses that come and say, kind of they've had that shit moment of, we're not sure we've got what we need, we're being asked by an investor, it's closing around, big seed rounds, Series A and beyond. There tends to be that requirement for directors and officers liability, which is covering the founders, the directors, and potentially key leaders in the business. It's actually covering them personally, that personal liability that you have for allegations of financial mismanagement, or even allegations from VCs around misrepresentation of the business. And so that's something that every founder should care about. And the moment as a shareholder in the business that isn't one of you guys, then it's just absolutely essential. And that and key person and critical illness cover will tend to be required in a shareholders agreement when you're raising. In private equity, it's required at deal, ahead of deal. In VC, there tends to be a little bit of leeway there. It tends to be within 3 months or 100 days of deal. And we have a benchmarking document, which I can send this group afterwards, which guides you on what limit you should have for EL, PL, PI, cyber, D&O, depending, and all of them depend on different things. Some depend on revenues, some depend on how much you've raised, some depend on headcount, but it's super, super helpful in just checking how's the program kept pace with the business that we now are today. And then cross-border coverage. So again, often businesses 1 year old, kind of two-year old, and 2 years old, take some funding. But the businesses that you are, startups, scale-ups, venture-backed technology businesses, you internationalize so much faster than traditional SMEs would historically have. And so there we can serve businesses in the US, increasingly in Europe, but every country you launch into, there will be an insurance consideration and an insurance requirement. And so it tends to be that as a UK company with a UK topco, you can purchase all of your insurance for all of your international insurance needs from the UK in one program, what's called a global program. The only difference is the EL here. Employer's liability, there's an equivalent in every country. In the US, it's workers' comp, and workers' compensation, and that has to be bought locally in that territory. And so that's something, again, that we're able to support on. But often you see businesses launch into the US, launch into Belgium, somewhere like that. And that, again, that kind of employer's liability requirement not necessarily follow. And so in terms of tangible ways to reduce risk, because this is a challenge for us, especially in 23, businesses that have been flying the last couple of years are suddenly under that pressure to find efficiencies, cost savings across the board. Insurance isn't really a natural place to look for it because kind of it tends to be kind of SaaS spend, headcount, premises, all these different things, but it absolutely is one, especially if you've been growing year after year for the last few years. You're well funded, you've worked with an insurance partner for a long period. It absolutely is, I mean, it's likely that your insurance program could just be growing in line with turnover growth, and that really shouldn't happen. And lots of this is about how you present your business to the insurers and what you're able to demonstrate in terms of the controls within the business. But identifying business risks is absolutely key. Using the areas of assets, liabilities, and people, and really understanding where are we most worried about. But ultimately, these are different things that you can be doing to get a hold of the business risk more broadly, and then it makes it a lot easier to communicate the kind of the risk reduction strategy to insurers. And so AJ, I think, kindly said that this is more interesting than he thought it would be. So thanks, AJ. This I think is really, really interesting, and especially kind of Lennart, kind of with a Bloom and Wild lens on, and all of the stuff I've heard that you guys do, illuminating. Sorry, AJ, around just being ethical, sustainable, responsible. And heard Aaron speaking about that at an Evelyn Partners event recently. When we launched Capsule, so we became a B Corp, really focused on ESG more broadly, and conscious that startups more broadly, venture-backed startups that have launched over the last 5 to 7 years, ESG tends to be more baked into their businesses than traditional UK SME, and so we were convinced that there must be a link between ESG, so how ethical, how sustainable, how well run, how well governed and managed the businesses, to the risk profile. But what we were kind of surprised and disappointed to really discover was that insurers don't look at this at all. A big player like an Aviva, Amanda Blanc, the CEO, talks about ESG a lot, and the way that they invest their capital, so insurers sit on piles of cash, so Aviva sit on £35 billion worth of cash. They then invest that through Aviva investors, and they're very focused on ESG and making ethical investments. But it hasn't ever really flowed through to underwriting in the same way. So we really started to challenge the insurer market to say, if we present to you a business, two identical businesses, and one we can show to you is very well managed, they have good ethnic diversity at board level, gender diversity at board level. This is that they treat their customers well, they treat their staff well, they have these policies, they're doing all of these things. If we present another to you that we're kind of silent on that, it makes no sense that the business that's going above and beyond isn't rewarded in that respect. So insurers really were looking for us to prove that. So we pulled all 588 B Corps as there were at the time. B Corp, for those that aren't aware, is kind of a mark or a kind of validation of a business's ESG efforts, where there's scores against the ES and the G, and an overarching score. So it allowed us to really pull that data apart. And what it proved out with a study with Aviva is that B Corps claim less than their SME peers. Their claims are less severe. They fail less than traditional UK SMEs, and they grow faster. And so all of those are positive metrics from an insurer perspective. And so that followed, there was a follow-on study done by B Corp themselves on the next slide, which ultimately proved out that point further around high levels of innovation. Number 7, I think someone mentioned the VC link, being able to access external funding, more robust governance. And so that allowed us really to go into the insurer market and say, these factors absolutely need to be recognized. And so we now have commitment from a number of leading insurers that they will recognize and reward ESG factors in underwriting. And so for a true startup, I mean, this is possibly interesting to know. It's not hugely impactful to, if you're just starting out now, we would focus on the basics that we spoke around of kind of having what you need. But this becomes really, really kind of quite kind of game changing when you get to a more established size. And even as an ESG centric startup, starting to think about your supply chain, which is clearly very important in terms of measuring ESG. Lots of insurers, some of them American, their ESG credentials are awful. They're still insuring kind of coal-fired power stations and businesses that kind of aren't ESG centric in any way. So actually what we're able to do is not just recognize and reward those factors in underwriting, but also align you to insurers that match your values. And I think that becomes increasingly important, but also conscious not everybody wants to be a B Corp or is at that point, or it doesn't fit for them for any for a certain reason. So we developed our own ESG index, which measures the ESG-ness of startups and scale-ups, because I think, again, it's easy to measure it for Google or Facebook, or kind of the FTSE and Fortune 500 in the US. But those metrics, they're not applicable to startups and scale-ups. You can't measure lots of the data that you can in those large corporates. And so we've developed one that works for startups and scale-ups. And it's a way of presenting the information to insurers, but it's also a bit of a pathway to report back to you as to how you stand versus your peers, where there's opportunities for improvement. But it also, if you're scaling very, very fast, allows us to put a line in the sand here. 1 year later, when we go to insurers and start to speak to them about renewal and they see that you've grown 50%, we're able to, by remeasuring you, then report on the improvements that you've made across governance or sustainability during that period. And it's a great way of demonstrating the professionalization of a business as they scale. And so we just quickly wanted to touch on some market insights. And again, back to this point of reducing insurance spend in 23, these are the types of things that can be done in terms of professional indemnity and cyber tend to be for a technology business where your core costs are. And the big challenge that we had from clients, which I really love towards the back end of this year, is it's easy for insurers to just keep saying the rate's gone up, the premium's gone up year after year, but they rarely tell them what they can materially do to reduce the insurance spend. What can they do that's actually going to have a positive effect so that the classic insurer conversation each year isn't, rates gone up, premiums gone up. And so these are the answers from insurers around what you can actually do. And I mean, in cyber, there's so much that you can be doing around kind of like it tends to be your biggest exposure is the number of records that you hold. So we deal with customers with hundreds of millions of data records that they're handling. And then the question there is around how often are you backing things up? Do you have regular and offline copies? Are you doing reinstatement testing? How do you do data segmentation? How do you handle settings and privileges? What password management systems are you using? How often are you doing software updates? Are they automated? Are patches completed quickly? And it kind of goes on. And I guess with the right insurance partner, it needn't be you if you're head of ops, if you're CFO, kind of dealing with this on a day-to-day basis. But there should be real value add going into your business to say, this is what the insurance market cares about. These are the things that you could be doing to really strengthen the business between now and next renewal. And that's kind of positive work more broadly, but there is a slight cost in kind of time of your team to doing that. But at least you know that work, it's the same with their ESG work, is actually leading to a stronger insurance program, a better kind of governed and more secure and safer business. But also you are getting that kind of recognition and reward as a result of it. And so hacks. So this is kind of things that we know that we feel that lots of startup founders and their teams necessarily might not kind of be aware as an option for them. So number one, having a third party review your program. I think if you go to like a big 4, big 5 broker, which everyone I think knows the accountants, but just on the insurer, it tends to be an Aon, a Marsh, a Willis, a Lockton's, a Howdens. They're the real big players. They tend to do a charged piece of work to review the program, come back with recommendations. We really cut our teeth here doing this for VCs and private equity. At the point that they're about to make an investment, we will do a diligence piece of work, which again is charged, and feed back on the program recommendations and such. We do have we ultimately have an offering for startups and scale-ups, venture-backed businesses, and clearly founders members, where we do that piece of diligence work at no cost, where we're looking at what are the limits, what are the inner limits, what does the wording look like, what are the exclusions, what policies do you have, are they on a global basis, do the excesses feel appropriate? Sometimes they can be too low. It sounds funny to say. The excess is the amount you pay when you want to make a claim. If you've received 100 million in funding and you're at Series C and beyond, and you still have excesses of 2,500 or 5,000, there's no need for it. It just doesn't make sense. If you could ultimately stomach a 25 grand loss or a 50 grand loss in that respect, if that has a tangible impact on the total premium you're spending, they're the type of things that could be fed back to you as kind of options. I think there was a question, what sort of cost reductions can we get on insurance contracts as we put in place those security initiatives? Yeah, it's a great question. So even on that excess point, in some cases we see low excesses and we go to insurers and push for a reduced overall premium, and you don't quite get one that feels proportionately actually worth doing it. And so we'll make a call on the cyber. Sometimes it's around cost reduction. Sometimes it's about market appetite and market access. So you'll find that some startup insurers are happy to insure on the basis of a limited set of security controls. So it's not too onerous. Those policies, though, tend to have more exclusions. And so the likelihood of them paying out in the event of a claim is lesser. And so lots of it is about putting those controls in place and then it opening the market up to larger insurers, some of the American insurers, some of the more tech-savvy insurers. And you actually, it sounds funny to say, but just getting through the door, passing through step one. But large businesses that have gone really focused into this and making improvements, ISO accreditations and so forth, you can easily see kind of rate reductions of 20%, 25%. So real kind of tangible. And that's a rate reduction So, I mean, it becomes even more dramatic as if your headcount, turnover, kind of revenue, amount of capital invested is going up anyway, then in pounds and pence, that becomes kind of more significant as you scale as well. Little known fact, and this broker not talking your language, here are your options, is our most read article on the website. Most people kind of, your relationship with your insurance broker is it's kind of a once a year conversation. It's very transactional, and largely not super strategic, super proactive. And so you have that 1 year kind of line in the sand that you're aware of, 1st of July renewal. And so when we speak to people and they're kind of wanting to make improvements, worried about have they got enough D&O, launching in the US, and kind of thinking they have to wait till July for one broker to quote against another broker. You have to run this process of which, again, given you're a startup kind of a leader, you probably don't have the hours in the day to actually do that. And so this is very big in the US, less big in the UK, but Capsule probably wins 75% of our business this way. You can actually just be sent a letter of appointment. In the US, it's called a broker of record. It's a one-page Panda doc, which has to be e-signed. And what that does is appoints a new broker to your existing policies that have been reviewed by that broker. And it allows that broker to go to the insurer market and say, we're now acting for this startup, for this venture-backed scale-up. And we call it evolution rather than revolution. So it's kind of introducing a new proactive, strategic, tech-enabled specialist partner into the chain between you and an insurer. And it allows them to get to know your business, but it also allows them to make positive changes ahead of renewal. And positive changes might be widening of limits, broadening of policy wordings. It might even just be that ability to support you in that intervening period because you know you're going through a raise or you know that there's a customer that's asking particularly challenging questions. But there's also softer things that can be done. Often as a startup, they buy all their policies at different times during the evolution, and then they have renewal dates all across the year with lots of different insurers. And so there's a real opportunity for the right broker to align all of your renewal dates to one common renewal date of your choosing, consolidate all of the insurers down so that you have greater buying power from them because they're getting a better percentile kind of insurance spend from you. There's less insurers on the list, but it also allows you to run the broker to run the most competitive renewal process because they can go to your incumbent insurers in a position of strength and say, we are now acting for X startup as their broker. We would like best possible terms. And then you can go to the broader insurance market and say, we've been appointed to this broker. If you can provide improved terms, then there's an opportunity. And it allows the broker to come back and do a full market scan for you to say incumbent options, alternative options. These are the improvements we found, and this is our recommended way forward. Broker representation, it's partly that. It's making sure, and same with tripartite relationship with insurers. If your insurance spend is over 100K and you haven't met your insurers face to face, kind of via Teams or Zoom, then that's an issue. Like that, nobody can explain your business better than you can, and insurers' ability to say no versus when they've met you and had the business explained to you to them by you is just, there's no comparison for it. So we're not supportive of kind of talking to lots and lots of insurers. Again, you're doing your day job, but in the case we have kind of 7-figure spend clients who have half their insurance premium by us just presenting the right information around ISO accreditation, around security controls, around why what the insurer perceives as being a big risk actually has been thought about, is in the risk register, has been considered, and there's an action plan in place. And so that it really kind of very, very few businesses do get that exposure to insurers, but we think it is absolutely essential at a certain level. And then again, benchmarking different products based on amount raised. We've got a much more in-depth piece on this, or kind of PDF on this, which we can share, which covers all of the different policies, products, and limits and such.
And then I just wanted to kind of finish by giving you an overview of how Capsule differ to traditional brokers on the market and what we do differently. So as Tom's mentioned, we're a startup ourselves and we've already been on that startup journey. So we understand the ecosystem and your business better to present the fact that you're potentially venture-backed and sometimes loss-making to insurers. We're also able to turn around quotes on key person insurance within 24 hours. With no need for a physical medical, so you don't have to take yourself to the doctors, to save time and energy for you to obviously get on with scaling, growing your business. We're able to support all the way from seed to IPO. So the insurances that you need now, but also the insurances that you need in the future as you grow and move to different territories, headcount spikes, etc., and you face new insurance challenges, we're able to support throughout the whole process. And as Tom touched on as well, we're able to offer a free health check that we'll do for Foundrs members. So even if you've just renewed your insurance or you don't renew for another 6 months, if you'd like a second pair of eyes to look at it and kind of benchmark costs and covers, we're able to do that for you to give you peace of mind that you're in the best place, you've got the right insurances that you need, and there's no blind spots. And then also, I'm sure you'll all agree with this, but insurance is quite a old-fashioned, painful industry sometimes, where you have like 20-page insurance proposal forms to fill out. So the key thing that Capsule do differently is we use tech to try and bring that age-old insurance beast into the modern age. And there's a few different ways that we do that. So we track startups and clients of ours on 300 plus data points, meaning that we can kind of be the proactive one in the relationship, see if you've received funding, if headcount has increased, if you've moved to another country, and we can be the ones to say, hey, there's a new insurance exposure here, and help to make sure that your cover keeps pace with your kind of impressive growth. And then also really to save that headache of having to fill in the same massive documents every year. We have Capture, our portal, to be able to upload your current policy documents, your pitch deck, and link in your financials. So all the information that the insurer would usually need, we're able to get that to start conversations with insurers in 5 simple clicks, again, to save you time and headache, to mean you can get back to kind of growing and scaling your business. And then if you're interested at all in Capsule quoting on your upcoming renewal, if you're interested in discussing that letter of appointment option where we can become your broker and kind of give you a broker that understands your business straight away, or if you're interested in receiving one of those free health checks, my details are there, and we'll send this slide deck around afterwards, and you can book a meeting through the kind of Foundrs page. And then finally, obviously, not just to hear it from ourselves, we've got some response from our customers, and I think insurance being a pretty boring topic, I never thought it would invoke as a passionate response as a holy shit, but we did even receive that from one of our clients as well. So yeah, anything to add there, Tom, other than that?
No, just on the slide before, Alex, before we close, the one before that, sorry, just to say on Capture again, for those with large insurance spend or lack of insurer appetite because you're in Web3 or crypto or just a large business, the big VC investors love to hear about kind of 10x growth. Insurers, strangely, less so, because they perceive high growth to mean high risk. And one concern they have is an insurance broker's ability to even kind of keep pace with that client. And so this is one lever we have that it's not required, you don't have to do it, but it's another really, really useful lever to keep a hold of insurance spend, where ultimately you share some top line financials. It can be through your Xero, your QuickBooks, your NetSuite. It can be kind of on a live basis. And there we can see if there's kind of sudden huge overperformance or underperformance. We can help to make sure that you never end up overinsured or underinsured, which is always the risk. Kind of the moment, if you're a 50 million turnover business and you project forward 100, the moment you do that is the moment you start paying as a 100 million turnover business, even though you might not meet that growth metric until the 11th or 12th month. And so through using technology like this, which often you're already using for revenue-based lending or open banking, it's something that isn't traditionally being used in the insurer market, but when done right, can kind of put you in the driving seat slightly. But no, apart from that, Alex, I think you go to the last slide, and that is that's the deck over. So thank you for listening to Insurance Chat for 25 minutes, and happy to answer any questions if anyone's got any.
Amazing. Thank you so much, Tom and Alex.
Thanks, AJ.
But yeah, just opening up for anyone who has a question on the tip of their tongue. Please feel free to either write it in the chat or unmute.
I have one question. I think overall super clear. I think the one struggle we have with insurances is mainly the international cover, and you mentioned that you need separate insurances, especially employee employment liability or employee liability. What would you recommend there? So we have large businesses in the UK, in the Netherlands, France, and Germany, and also in a couple of other countries. And what we encounter is that the broker typically is able to serve us in one or two countries, but not in the other. So we have to find another broker. And ideally, we have just a single, we centralize everything. Could you elaborate on that a bit?
Yeah. So I think especially the type of business you're dealing with, then you ultimately, as you scale, it becomes one of those frustrations with the right, I guess, our previous business that I alluded to, Kingsbridge, was serving FTSE businesses, for FTSE businesses. And there, a FTSE business tends to have an in-house employed insurance manager. But actually, in the cases of those clients, they didn't do that, and they actually outsourced that insurance manager role to us. And there, we were able to act kind of almost as an outsourced insurance manager, but then also as a traditional broker. And in doing that, what we were able to do then is, yes, we needed to arrange employers' liability in the Netherlands, in the US, in Germany and such. But actually, that was something that where we faced off with those local brokers. So Omnipresent are a great example, employer of record client of ours that are in 65 countries, where we arranged the workers' comp for them in 65 countries. And in some of those, we use partner brokers, but ultimately, as far as the client's concerned, they're dealing with one broker, one contact point to arrange those policies. And it just so happens that some of them you're having to rely on the ground in Kenya or wherever you are on a local broker, but it feels much more seamless from a client perspective, almost because that's something that has been kind of made a requirement of the partnership.
Yeah, got it. Helpful.
But in one way, Lennart, it's one of those unavoidable things ultimately. If you're going to be in Singapore, you have to buy it from a broker in Singapore. And in a funny way, even if you're insured by Aon, that are going to have kind of coverage in every territory, it doesn't tend to feel that different than a broker that's using partner brokers if it's delivered in the right way.
Cool. Thanks.
Perfect. Thank you. And beyond that, if there's any other questions, then I think Alex shared his email, or kind of reach out to AJ or either or any of us at Capsule. If the benchmarking document sounded interesting to anyone, again, then just reach out and we'll happily share that. Any weird or wonderful questions, then just send an email and we'll happily dig into it and see how we can support.
Amazing. Brilliant. Thank you so much, Tom and Alex. Give people a couple 15 minutes back of their day. But really appreciate the very passionate and clear explanation of insurance. I think we'll have to have a conversation about my other business as well, because insurance. But thank you so much. And I'll be posting this on Copyin. So
awesome.
Thanks for attending. And getting
great. Yeah, thank you very much, everyone. Great to meet you. Thanks for your time.
Thanks, everybody. Appreciate it.
Cheers. Bye now.